So this is a weekly commentary where I'm going to be covering the 10-year yields, the bond market, dollar index, the stock index markets, aside from the micro contracts, Dow Jones, GDP USD, Euro USD, gold, and Bitcoin. I'm going to start off with the US 10-year yields, and I'm going to be comparing 10-year yields with the bond market, the weekly and the daily time frame, where we have come from, where we're most likely to draw to. So this week we've been bearish, and the power of 3 allowed for price action to accumulate longs within the previous week's price action, previous week's range, before taking out not only last week's high but the 17th of November's high, and also the 22nd of September's high as well. So I would deem these highs as relative equal highs. We've seen, we closed at 4.186, the highs is at 4.199, so we failed to get a closure above relative equal highs. I was looking out for that 4.232 to 4.258 new week opening gap region for the market to draw up into. I'm not saying that's still not possible. I am actually still looking out for a potential draw up into this area, but then I am cautious that the market has been in a bear trend from pretty much the beginning of April. Alright, so what we're seeing right here is an order block that has been tagged right there with last week or this week's price action closing where it did now, and you can see that the market has supported price action within this buy side imbalance, sell side inefficiency on the weekly time frame. This is also another BSC that price action supported. We're back down into this area here. We've tapped this area, supported this area once, twice, 3 times before the takeoff, taking out buy side liquidity. And within this order block, there is another order block that the market has not come back down to touch yet. So the interesting areas in price action going forward would be this down close candle, the high of the down close candle, which would be 4.168 to the open at 4.150, and I'll be looking at this new week opening gap. Alright, so going forward, I don't have a set bias in mind. That's the overall bias is bearish, but because we've been seeing bullish price action, I'm inclined to want to see the new week opening gap be supported by price action before seeing some form of a rollover, although this is a bearish order block. Right, this is the start of the bearish order block with the 2 up close candles and the shift in market structure with the fair value gap, right, which the market has rebalanced. So when I compare this over with the bond market now, you can see there's a lot of chop in this area. Right, you've got the 3 up close candles, right, and it's still trading within the 3 up close candles. We've got the break there with the fair value gap now. Is it a strong order block? Would I deem it as a strong order block? Not really, not really. But going forward, I'm looking at this sell side liquidity pool right there, which would be the shifted market structure, the main shifted market structure. If the market was to break this bearish order block and make its way down to a lower price, I'm looking at the weekly bullish order block that has supported price numerous of times, and sell side liquidity at 111, 13.5, and the order block is at 111.05.0. Those are the price points that I'd be looking forward to for price to draw down into. Alright, but with that being the case, if I'm looking for a drawdown into this region there, US 10-year yields would have a potential to rally above the order block. Take the new week opening gap and use it as a form of support. With the bond market, it will be a similar thing where this gap has already been balanced. So I'll be looking at this low, but the most important low would be this low here specifically, and this imbalance in price. When I move over to the daily time frame, get into the nitty-gritty of things, it's clear that with these consecutive down close candles forming, taking sell side liquidity out in the past, in November, but failing to take the long-term low out, we support price action in this area here, and we start to make our way up. And as soon as price action trades above the opening price of the order block, that would be deemed as a bullish order block on the daily time frame. We got that, highs taken, we dropped down on Wednesday. Thursday we supported the buy side imbalance, sell side inefficiency inside of the bullish order block, right? This is a IPD area, and the market has rallied up, dropped back down, failed to go back down into the 50%, but it did support price at the 0.25% mark at 4.148. And with a setup like this, I would expect the market to draw up, and this is on the daily. I'd expect the market this week to draw up into that new week opening gap discount and premium price action. Actually, there's a valid liquidity void up in that area there, right? Whether we get the wick and then we reverse and take the lows out, that will be something we will come across. That will be something I will address as the time passes by. Right, so it's a very simple trade setup that I'm seeing here. God, I just woke up, man. Crazy. But yeah, so I'll be looking for a draw to buy side liquidity and a rally above this area here. If I fail to see a closure above the 4.209, then you can expect the market to potentially roll over. One more time, trade back into this busy, and then another test to the upside. This is a bullish order block to be taking close interest in, so the 4.088. So how does that link in with dollar index? It's funny because this is actually the first time I've actually noticed dollar index and the US 10-year yields doing two different things, really. If you have a look at the past 3 weeks of price action, we supported we supported the price action there, we supported the new week opening gap, buy side imbalance, sell side inefficiency before making its way up, taking buy side. Bonds, 3 weeks, we failed to take the highs. The week after, failed to take the lows, but we did take the, well, we didn't take the major lows out, but we did take the prior week's low clean out. And this week that is closed, you can see sell side liquidity tagged. So what could happen, because this is an order block in of itself, you could see a sharp spike up into this gap before rollover. But sell side liquidity is where I'm looking for price to draw to. But back to dollar index now, because it's been range bound for quite some time now, and we've tagged the weekly order block. It's a good chance that we could actually reverse from here. But where we could go on the weekly time frame, honestly, I have no idea. I'm neutral. I'm actually neutral, because with this order block, last up close candle before we saw the dump, right, with a small minor fair value gap, so that would deem this as a valid bearish order block. Right, this week's candle tapped the weekly bearish order block before closing lower, trading down into another order block. So we're going to continue this downward trend with more weekly candle closures, potentially reaching down into this area here. That is possible. This is high resistance within the zone. Ooh, high resistance. So in order to get a better idea of what I could see going forward, is going down to the daily time frame, having a look at these two up close candles, down close candle, fair value gap, inversion fair value gap, and you've got a volume imbalance. Alright, so this order block has been tagged, but we do have sell side liquidity down below. Now the problem I have now is I'm expecting 98.030 to be tagged, but then if you have a look at the yields, assuming that higher yields, right, dollar will chase higher yields, right, meaning that if dollar goes up or if yields go up, dollar index also goes up. We've seen 2 weeks of bullish price action, whereas with dollar index we've seen 2 weeks of bearish price action. So it's the complete opposite. Now when you compare dollar index to the bond market, the last 2 weeks has been bearish, and the last 2 weeks, 2 weeks has been bearish, 3 weeks has been bearish. So it's a very usually what you'd want to see is dollar index making its way yields making its way up, and then dollar also making its way up. So it's got me thinking that we might see some sort of a low resistance liquidity run trading above this area here. You know, since we've already tagged the weekly order block, we're going to start to rally from this point onwards, you know, and I might be wrong about that 98, I might be invalid about that 98.030 region. We might not reach it yet. And on the daily time frame, you can see there's a volume imbalance, SIBI, and then there's an inversion fair value gap for the market to retrace back up into, and then make its second leg down into these regions there. Right, these are the regions I'm more interested in going forward in the future. Maybe not next week, but the weeks that follow after. Alright, but having a look at what we've seen so far, alright, you have a gap there. It's very, honestly, I do believe eventually we'll drop back down into this region here. Whether we get there this week, next week, sorry, I'm not too sure. I'll be very honest, I'm not too sure. But I do have faith in this imbalance, sell side, and you have this new week opening gap as well, with the weekly discount wick also in the cards. So it's a very tough decision to make, I'll be honest, because we were in a downtrend, obviously. Are we going to continue the downtrend? Of course. I mean, everyone sees that we're in a downtrend. But that could be the very reason why we actually reverse and fill up these imbalances there before reversing. Because this would make sense when comparing what US 10-year yields are doing. But I'd like to see how we open today. If we gap lower, if we gap higher, that will give me more of an indication whether we're going to continue the rally with US 10-year yields and reverse with dollar index. Now, I do quickly want to show off the US 30-year yields, because you've already seen a rally up into this SIBI. We've yet to make it up into that 4.881 area, and this is on a weekly time frame, guys. All right, this is an IPDA array in which the market has created the high, the low, and we're currently trading higher than the 50% region. Right, this order block, last up close candle has not been met as of yet. The last up close candle low is at 4.871. The highs is at 4.867. So even with the US 30-year yields, I am expecting the market to drop into this area there. This new week opening gap is on and roll over from this point onwards. Very similar story where we have a bullish order block. We have multiple down close candle closures with the order block being activated from this candle here. We get the retracement, filling in these two imbalances in price, volume imbalances, and then we see the takeoff. Another order block. Right, where does the order block start from? Well, have a look at the opening price, 4.755. This week's candle, the low is at 4.751. So we tagged the order block and then expanded higher, and we're looking to make our way up into the 4.881 area. Right, and this is on a weekly time frame. Any higher than that, I'm looking at this new week opening gap right there. So that is between the close at 4.929 and the opening price at 4.960. Right, on the daily time frame, as mentioned, 4.881. This is inside of a imbalance, a buy side imbalance, sell side inefficiency. We have an order block for the market to draw up into. I haven't you know, added any lipstick. So I just want to keep the charts nice and neat. Buy side liquidity has been taken. The order block that I mentioned is there. Sell side taken. Fair value gap. Reached into that fair value gap with an institutional order flow. I mean, can you really call this an institutional order flow entry? Because it just peaked its head in the BSC before making its way higher. Made its way higher, created a buy side imbalance, sell side inefficiency, price supported that area, and we made our way higher. And we closed above the previous, well, the 12th of December, sorry, the 8th of December's high. So there is a chance for us to rally even higher and reach up into this SIBI. As I mentioned before, we have a new week opening gap that the market could also reach up into, and a SIBI for the market to drop into also. So how that compares with dollar indexes, we're going to have to see some form of a low resistance liquidity run, either on a lower time frame into this area, or on the daily, one straight candle trading above this area here. So that'll be something to look out for, really, you know, because my bias for dollar index is, you know, 98.030, but I'm willing to study to see how, I'm willing to study and sit on my hands to see how price action delivers next week, because it's the first time I've actually witnessed something like this. Usually you want to see, you know, the US 10-year yields, the 10-year and 30-year rally on the daily. This is the daily, and the same should happen with the dollar index, right? Because I mean, the higher yields means, well, if the yields is increasing, right, people who are invested in the dollars are going to want to have more for their money, right? They're going to want to invest in the yields, right? They're going to want to put their money in something that's safer than, let's say, Bitcoin, right? Because the yields are increasing, they're going to be making more each time they get paid, right? So I'm just, yeah, I'm not even shocked too much. I'm just like, wow, first time for everything, I guess, you know. So I'm gonna be sitting on my hands with the dollar index, but have more certainty that with the US 10-year yields, 30 and 10-year, we're gonna be seeing a rally in price above the highs, you know. So I'm having a look at the stock index market now. You see that we've rounded off. I'll just quickly go over with Bitcoin, because this is a very interesting pair. Go from order block here. We've currently been bearish. Go back over to the weekly. We're still trading in this range here, and there is still a chance for us to trade back down into this bearish order block. We actually failed to meet that 80,482 mark, but we'll get to that shortly. Stock index market. So created all-time highs. Yeah, this is a low. This is a lower low. Lower high. So higher low, higher high, lower low. This low was taken, even though the order block was supported by price. Assuming that this is the high, this is a lower high. So where would be the lower low? Anywhere below here. I've outlined 6,280 to 6,157 as a price point that the market could draw back down into, which from here is nearly 10%, which is crazy, and that's on a weekly time frame. So I don't have full certainty that this could play out soon, but it definitely can play out. I mean, we've seen drops of more than 10%, that's for sure, in the past, you know, 16-17%. So a minor draw to 6,200 from the highs that it is now, 10%. That ain't too bad. That ain't too bad. It's gonna probably take a couple months to play out, you know. But what I'm trying to say here is this here must be supported by price action. So the highs, so assuming that this is the bullish order block, 6,801 and 50. The lows, 6,000, 802. 6,801, 6,802. So we didn't even get to meet that area. So I'm bearish in the sense of the market drawn down into this down close candle here. We've seen the highs and the lows, not the highs taken, but the lows still intact. And when having a look at the premium wick, you can see that the 50% mark has been tagged, but we failed to see a candle body closure inside of this range, which gives me the assumption that even though we've been bullish, the bulls are starting to weaken to the upside. Smart money is going to want to reprice ES lower. Where could we go? Well, honestly, everything here has been balanced. This order block has been tagged already. I'd like to see these lows taken here, this low, right? It's a lot of support to the upside. So it's either think about it now. We've been rallying for quite some time. So it'd be natural for us to see some sort of a consolidation. That I don't mind. So we could actually drop, take sell side out, but we could rally back up into this range here, right? Because we've been rallying since in April, really. You know, we do get those sharp drops every now and again, but as we are in this range here, we've been seeing quite a few more down close weeks than before. So I'd like to believe that the weakness, the strength of the bulls is weakening. Moving over to the daily time frame. This week, meaning that we have wouldn't say relative equal highs, but we have buy side liquidity, and we also have a liquidity void for the market to drop into. We open on Monday, small gap, drop back down, BSC failed to reach. Wednesday, rally above the highs. Thursday, close above the highs. Friday, quick drop, sell side taken, buy side intact, right? But the consequent encroachment of the BSC has been supported by price. So what I'd want to see going into next week is a straight drop. Let me just adjust this. A straight drop into that new week opening gap, because we've not actually seen a repricing yet. We've got the ground, break, test, drop, rally above. I mean, you could argue and say we did, right? But since we've taken the highs out, this would be the most probable area in price for the market to draw down into, right? Having a look at price action 4 tiers, we have an order block there, imbalance, highs taken, imbalance, tagged. So could we get something along the lines of we drop down into this area and reload for a leg up to all-time highs? See, ES is another thing which I'm in the middle. I mean, we've been chopping for quite a number of weeks, man, a number of days. It's very difficult to actually have a good feel on what could happen, especially for the last 2 weeks, you know. So quickly on the hourly time frame, created the highs, you left that new day opening gap open, and so far we have this SIBI that the market could draw back up into before dropping and taking the lows. Now, dollar index are saying if we see the rally in dollar index, question is, are we going to see the rally in the stock index markets? So let's have a look at the daily again. Daily. The daily for the dollar index has been bearish. The daily for ES has, I mean, could you say bearish, bullish? I would more lean to the idea that it's been consolidating, since even though we created the highs and lows, we're just chopping, you know, with high resistance in this range, you know. So I'd like to sit on my hands with ES going forward for the week, right? But at the same time, I am interested in this down close candle, so the high at 6,801.50. At the same time, where we could rally up into if we do get that draw. I'm not too sure. So I'm going to keep the bias open. I'm going to move over to NQ. It's a similar story in the sense where we've created the highs, created the lows, right? Could you argue and say that this is an order block, weekly order block, 3 up close candles, 3 down close candles, the rally? Is there any fair value gap? No, so this wouldn't be deemed as an order block here. We have a liquidity void that the market has rallied up into. Last up close candle, order block, the market has also rallied up into. I don't need to keep that. You know what, let me leave it there. That last up close candle is a bearish order block. So if we were to get the reversal from this area here, I'll be looking for the lows at 23,904 to be taken. And very similar to ES, since price action has been balanced whilst the market has been trading to the upside, I'd have to be looking at this inefficiency, right, which is 22,807 to 22,431. From the current price action that we're at now, that's pretty much 10%, just over 10%. More than that if you look, more than that if you assume that the highs has already been booked. Alright, this here would be deemed as an order block, and in comparison to ES, NQ is actually tagged the order block. Right, we've closed inside of it, which is also inside of this IPD area. Alright, so on a weekly time frame, even more neutral, but in the long term, I'll be looking for a drawdown into this area. I mean, I could be wrong. We could consolidate since we've been in a bull trend for quite some time, since April. But looking at things, right, from a smaller scale, I'm looking at these two areas here, 24,887 to 25,379 area. This is the ranges where I do believe the market will draw down into this week, next week. Where exactly, I don't have a strong bias, so I can't, put that in the ether. So far, we're in a discount array. We tagged the 50% mark. We're inside of Abyssi. You could easily reverse and then continue lower. You could easily continue lower without even rallying higher to 24,966,175. That is a strong possibility. We also have this volume imbalance for the market to draw down into. So aiming for low-hanging fruits right now, I would have to be looking at the lower time frames before making some sort of a bias. So as I said, on the weekly, I'll be looking for a drawdown into these two. So these two IPDA arrays are the areas that I'll be looking into, right? So 24,887. So 24,887 is basically below this discount wick, right? So these ranges are the ranges I'm gonna want to work with going forward when scalping. Alright, so here we go. Let me call you in a minute. I'm just doing a recording quick. Alright. So I'm more interested in playing the ranges inside of this discount array on a daily time frame. And what I mean by playing the ranges is when going over to the hourly time frame, you can clearly see how price has been supporting that discount array already, even though it just reached down to it. So we hammered into that 50% region. The day after, we took the high. So this is on a Friday, last Friday. Alright, last Friday we took the highs. I'm saying last Friday, like this is a weekly time frame. This is on Friday, so Friday started here, my bad. Alright, and we dropped, took sell side out, right, created a shift in market structure, and coming up towards the closure, the PM session, we tried to rally to fill this gap here, but we failed. Candle body failed to close above this area here. I'm looking to roll over. Sell side has not been taken, and I'll be looking for continuation to the downside for NQ, looking to target that 25,052, or should I say that 25,138 area first draw, 25,052 second draw, and 24,966. This full range here is over. Well, put it this way, the range I'm working in is a 1,300 tick range. I'm not saying I'm going to be making 1,300 ticks, but that is the range I'm looking to work in, and that is more than enough for me. Listen, all I need, right, out of a trade is 50 to 100, to be honest, 80 to 100 ticks from one trade within the 9:30 to 10:30 window, or the 3 o'clock to 4 o'clock window, and I'm good. So this is more than enough range for me to work with next week. More than enough. So, you know, quickly show you guys a bit of nitty-gritty price action on the 15-minute time frame. 15-minute time frame, you can see it bottomed out, coming up towards lunchtime. Shift, fair value gap, supported price. SIBI respected, bearish order block, the market rallied up into, reversed, low resistance, minor retracement, 3 upload candles, order block. Has the market reacted from the order block? Well, let's look at the low. What's the price of this candle? 25,225, right? 25,225, right? What's the high? 25,226. Right, so you met this order block, and then now we're looking to reverse. So depending on how we open, I'd like to see the market just turn over just like that. And have to look at the 5-minute time frame, right? Very intricate. This is where money is really being made, because having a look at the market structure shifts is where it's all based at, you know. Take the low, order block there, highs. Once the highs is taken, I'm looking for a retracement in price. We get there, right there, 12:30, bow. So what am I looking at? Highs, imbalance, SIBI. Do we get there? We do indeed. So where would I have placed the trade? Well, assuming that this order block is a bullish order block, and we're looking to see higher prices short term. Short term would mean the market's more likely to, it's a high possibility. This is where I am confident. Once I see movements like this, supporting price action with multiple confluences, look at the support of the day. Remember the daily discount range. Remember that daily discount wick right there. This is what I'm working in. All right. This is where money's being made. All right. Bullish order block inside of the daily discount wick, inside of the daily BISI, right? Has many confluences in one. You get the drop, right? Because once you get the rally, now I'm waiting for the first presented fair value gap. Where is that? Right there. Get the drop, right? We support price action just like that. As soon as we support price action, I'll be going into the minute time frame, and I'll be looking to take along with my stop loss below this area, or at least at that 75% region mark. The idea is I do not want to see price action drop back down into this BISI one more time. There's a higher potential for the market to rally above highs that was created, previous highs, than it is to drop back down into the BISI. So once you get this, then obviously this is partially filled. So I'll be looking for a full fill of price action. Remember, we actually reached up into the start of the bearish order block. Look at that. Can't make this up, man. Look at that. Just like that. Got the drop. Supported the first presented fair value gap, because this was a candle that started the bullish order block, and you'll be looking to take a trade up into there or there. Anywhere there would be great. Let's assume you're taking a trade there. How many ticks is that? Assuming you're repricing higher, so that's 285. If you're looking to take profits back there, it's 327. The order block itself, 364. The highs of this SIBI, 406. How about the last up close candle in the bearish order block? That's 500 fucking ticks, man. If you know how to play your cards right. That's all you need for the month. That's all you need for the month, man. This is on a 5-minute time frame, guys. 5 minute, guys. 5 fucking minutes. But yeah, I'm not gonna spend too long because I will spend the whole day doing this, and I've got to leave soon. So overall, on the weekly time frame, I'm looking for bearish price action, but on the daily time frame, I'll be looking to play these ranges here. Right, whatever happens outside of that, I'm not too fast because I'll be scalping regardless. But when having a look at the intraday time frames, those setups that I'm mentioning are the things I'm looking out for when I'm looking to take a trade. 1 minute time frame, another entry there, so bullish order block, get the break, first percent fair value gap. We do get that. There's a support price action just about there, right? But what happens after? You get the sell side liquidity taken, order block one more time, right? But you can see consolidation because it is a Friday, but you'd expect the market to rally and take the highs out. But after you see support and price action, we did take the highs out, but we just consolidated afterwards. So I'm not gonna go too deep in. You could even look at the 15-second time frame to really get nitty-gritty, but 15-second time frame, this would be a beautiful trade setup where we have bearish order block, break, supporting price action. Now I'm looking to go fucking long, take profits, and that's 120 ticks on the 15-second time frame. But this is something that I'm going to keep close to me, the 15-second time frame. I do want to really practice on executing and, you know, getting the trades right. So I'm not going to be talking too much about the 15-second time frame because I'm not as confident as I'd like to be yet. Going forward, yeah, I'll definitely update the markets, definitely for sure, and update myself with how things are going. As this is a general review for me to look back on, and, you know, see if I was doing things right at that time. Dow Jones highs booked, 3 up close candles on a weekly time frame. This premium array price closed inside of it, which means that I'll be looking to play inside of this range here. This midpoint has been tagged this week. Weekly is very tricky. I'll be honest with you. I mean, you could look at psychological numbers and say that 50 is the next draw in liquidity, but I don't believe that's going to play out in 1 week's time unless something major happens. Alright. On the daily time frame, I mean, to be specific, we have bullish order block, price supported it last week, and we continued the rally this week. But it's nothing really major to talk about apart from the fact that we're playing inside of this 10th of November premium wick range. Alright, so on the daily time frame, what have we done so far this week? We've supported this order block, bullish order block, as well as this BISI. Tuesday created the low, or Wednesday actually created the low for the week. Took price that liquidity out. Thursday tagged it one more time and then supported this down close, these 2 down close candles before taking the previous all-time highs out. Friday we had TGIF where we had the retracement of the weekly range, and going forward we have this BISI. We also have this order block that the market could draw down into, and because I am bearish with Nasdaq and ES on the weekly time frame, not that much, there's only low-hanging fruits really, right? It's not nothing major, but due to the fact that I do have bearish tendencies for those 2 pairs, and I look at YM, and YM, it only has 30 stocks in its index, right? 30 stocks in its index, it rallied higher whilst ES and NQ failed to book highs. That means that YM is going to have a deeper retracement than ES and NQ. But then if this has a retracement, then that means these 2 will potentially drop even lower than the ranges I've outlined. But YM, I would have more confidence in YM actually selling off, dropping and playing into that 48,215, 47,900, 47,584 range, even the 47,269 range, right, than I do with Nasdaq playing in these ranges also. I'm not saying it's not going to, I do, because it's already in the range. But what we could see next week is maybe one of the days just rip up to the upside and trade up into that new week opening gap at 25.5 on 10. You know, ES, we're not in a new week opening gap, so because we've already supported the consequent encroachment of the daily BISI, then could easily just rip to the upside, you know. We'll have a look at YM. This is on a daily. There is a chance for us to drop back down into that 48,215 area. We closed on the side of the range, and it doesn't necessarily mean that the market is bearish. It just means that we're seeing some form of a short-term retracement before the next leg to the upside. When moving over to the hourly time frame, there's not that much annotation done here, just due to the fact that, did I save the charts? I swear I've done my analysis. Why does my charts look like this? Unless trading views playing games with me. Anyways, this week we're bearish until we made that shift. No fair value gap, no fair value gap. First presented fair value gap. Bow, retracement. Full BSI fill. Full BSI fill. Low 47,859. Highs 47,859. Can you make this up? It's price action random. Get that fill. Reverse. Take the highs. Gap. Not filled. Gap. Filled. Right? Start to weaken. The balls start to weaken. Get that drop. Right, so where could we land next? Well, this right here will be the next draw on liquidity. If the market was to continue to the downside, this is an area in price where I would expect the market to not reject, but at least react to, you know. I don't really have that much to say with, you know, YM. Not that much, to be honest with you. It's not like I trade YM, so to speak, but it's very interesting to compare it with the two other indexes. As you guys understand, my bias for the week is bearish on the lower time frames. We're moving over to Forex. It's interesting because we have these relative equal highs right there. We have this premium wick. And on a weekly time frame, if we were to see a rally up into this area here, what does that mean for dollar index? See, this is the reason why I was confused about whether we could see a second leg to the downside, maybe a rally and then a second leg. Because if we get that, that would support GDP USD's rally, taking out relative equal highs and trading up into this premium array before making its mind up to reverse. Alright, we've been bullish for 3 weeks. Dollar index has been pretty much bearish for 3 weeks. But even then, it's not that, you know. I mean, the highs from the 21st of November. Let's have a look at the 21st of November. Yeah, so we created a low there. And ultimately, I mean, let's have a look at the weekly first. So, the weekly. So, long-term low, long-term high, intermediate term high, and then we have a short-term low here. Stops taken, intermediate term low, right? Order block, tagged, rally, buy side. Where's buy side? The buy side is there. We haven't reached there yet, and this is the reason why I'm just on the fence right now on the weekly time frame, because this weekly discount wick, right, has been supported by price action. This monthly BSI has also been supported by price action also, right? So that's good confirmation for me to then say, you know what, I'll be looking to go long for the next week or so. But at the same time, we have this BSI here that could be supported by price action since, I mean, when was the last time we've left the gap unfilled? It's been a long time, I'll be honest. So with this gap here, what we could see next week is whoop, boo. Could see maybe a drop, wick, maybe potentially drop down into that 1.32445 and then rally to the upside. If we get that drop, that would aid dollar index, right, to rally to the upside, right? Fill these imbalances and then reverse. And have a look at the daily time frame. We have the order block that has been, so this has been activated, right? But at the same time, where's the fair value gap? Well, we got one there, but that was before time. There is none after. So we have previous highs. Didn't really get a good candle body closure above that area, and we're in a tricky position even with GDP USD. I personally would leave this alone. But at the same time, we could see a low resistance liquidity run above these highs, trading up into this premium wick array, which I will be interested in. Right, 2 down close candles, rally to the upside. The highs respected. It's very tricky, very, very, very tricky, especially in the times that we're in now. As for the hourly time frame, see, created a high, shifted market structure. Is this an order block? Because if this is an order block, right, price has already supported that fair value gap, so I'd be looking for a rally above these highs there. See, on the hourly time frame, I have more of a bias going forward compared to the daily and the weekly. See, on the hourly time frame, I have a strong conviction that these highs are going to be taken. This gap is going to be filled, right, before we see either a leg to the downside or support in that area, in that SIBI or inversion fair value gap to take price even higher. Right, the question is, if we, this is the reason why I've set an alert there already, right? I've already done that, right? But ideally, I'm actually going to do this as well. It's on an hourly time frame, so you never know. If we were to see, if this is the current low, right, for the Sunday and Monday, then I'd like to see this area taken. Right, so on the short term, I'm looking for a rally up into this area here, but that would mean for dollar index, the hourly time frame, we're going to see sell side taken, or at least this gap be filled before we see a reversal. So the gap fill, wick, manipulation to the downside, and look to rally higher. Right, take these highs out. Right, that could also play out. Euro USD, rough story, man. The only difference is we are trading inside of the premium wick range. We failed to rally up into that 1.17901 area, but we have reached that 1.17472, which is the beginning of the premium wick range. That 50% midpoint, 1.18330 in the cards. We also got a discount wick array supported by price action there, and then created the lows, the higher lows there. Took stops there, stops failed to be taken. So Euro has more of a cleaner run than GDP USD, but at the same time, if GDP USD moves, if Euro USD moves, GDP USD is going to move also. Efficient delivery, little to no fair value gaps on a weekly time frame, so I can only expect the market to drop into this area here, and if it doesn't and it reverses from here, then I'll be looking at this order block one more time, but a failure of this order block, and I'll be looking for lower prices beneath that 1.14686 region. So on the daily time frame, I set a flag to that order block area, right? Because I am expecting the market to continue to rally to the upside. We have been seeing good bullish price action, really and truly. You know, we've got the new week opening gap supporting price action, the market closing above this area, even though it closed inside of Thursday's price range. And this volume imbalance here, which is beautiful, especially for a forex pair as well. We have a bearish order block that the market has supported once. I'd like to see the market rally up into this area and actually trade higher than that 1.17790. So on the daily, I'm bullish. You know, on the daily, I'm bullish. When you have a look at GDP USD, honestly, I can't be bullish. I mean, you've got relatively equal highs there, but see, I'm bullish. I put it this way, right? I'm bullish until we see the break of that 1.32874. So I'm bullish up to that point there. If we see a break of this low there, which is Tuesday's low, I'm not interested, right? Because I'll be looking at these highs here. I'll be looking at that 1.34675 to 1.34874 area. But I'm more interested. I would be more interested in Euro if I was trading forex this week, with seeing that 1.17790 price point being met, right? Order block supported by price, fair value gap supported, new highs, fair value gap, fair value gap. So yeah, we're on a bull trend. We are currently in a bull buy program, should I say. You know, we supported this daily buy side and balance, sell side and efficiency numerous of times before making its way higher. We do also have this weekly, monthly SIBI that the market has not drawn up into in a while. So it's a lot of things going on right now, to say the least. You know, I'm not gonna go into the hourly. I'm gonna leave that to the stock index market. So let's move over to gold on the weekly, looking to target all-time highs. As you guys know, God's money, that ain't going nowhere. Massive rally in price, small decline, filled BISI, and now with that BISI filled, I'm looking to make new highs. We're looking at psychological numbers, 4,500, 4,006, 5,000 is the biggest price point for the market to rally up into. Yeah, so look out for that on the daily time frame. Efficiently delivered after making this an inversion fair value gap. Looking for the highs as mentioned. Nothing really much to talk about with gold. I don't trade gold, but I do dollar cost average into it, so I do like to study it from a weekly and daily perspective, and monthly as well, which, I mean, there's nothing really much to go on apart from the bullish shooting star. And if we do get the highs to break, which I do believe is going to happen, what do we do? Do we break the highs and then close lower? Because if we do, then we're looking at this fair value gap here. Alright, so those are all the things that I'm looking out for gold. With silver now, which is the most interesting pair, right? Well, actually at $61, right, on the weekly time frame. Very strong bullish price action. Daily, another BISI. We also have another BISI. Price action supported that BISI beautifully, and I'll be looking at psychological numbers in the sense where $65 has not been met. $70. Those are all areas in price which I'd expect the market to rally up into, especially when gold is also rallying. You know, so that is all I've got to say for the precious metals market. Moving over to Bitcoin now. So on the weekly time frame, I did call for that 100k mark. That 100k mark has been met. We even got a steeper decline into this BISI on the 21st of April, and we're currently consolidating inside of the BISI. We're currently below the consequent encroachment of the BISI, and going forward I'll be looking forward for the market to draw down into this order block array, right? So between 80,482, 78,466, 76,450, that area there is the area I'm looking forward for the market to draw down into, which would also mean, oh, it doesn't mean anything really, but it would give me more of an edge when looking at the stock index market, especially NQ, ES, YM, because if we do get that decline that I'm looking for with the stock index pairs, alright, if I do get the decline that I'm looking for, then Bitcoin would also make that drop. And how much of a percentage point move is that? 10%? Yeah, so it's roughly the same amount. But you see, Bitcoin's 10% is going to probably be ES as well. Let's say NQ, that's going to probably be, I don't know, 1%, 2%, 3%, you know. Bitcoin's movements is always exaggerated. You have a gap there that I was looking for the market to trade up into, but since we've seen a free drives pattern with the market failing to close above the previous, or the Monday's 24th of November's high, weekly high, it then gives me the idea that we're not looking to rally up into that area there. Because initially I saw this order block, but I was also looking at this fair value gap here. And I thought, well, if the market was able to trade above this, because obviously we have this order block there that was supported by price, if we can close above, right, 94,181, and especially above the 92,790 area, which is the weekly imbalance, as mentioned before, then there's a very strong chance for us to rally up into this area. But right now, it's looking very weak. It's looking like, since buy side has already been taken, what's next? Sell side. So I'll be looking out for that 87,733 mark. I've already placed an alert there, and then we placing another alert at the lows right there as well. So Bitcoin, I am looking for a bearish draw in price on the daily. I'm only aiming for low hanging fruits, but this is inside of a weekly, daily order block inside of a weekly BISI, right? So that is something to take note of. So that was the general commentary for this week, and I'll be back next week with the update of how this one goes.